In addition to consistently leading the EV market in sophisticated innovation, Tesla sets the standard for production practices. However, 2020 has turned out to be an extremely difficult year for Tesla, in line with what CEO Elon Musk had said. The corporation had a harder quarter in Q2 because of a number of setbacks that it encountered. Even after Tesla's performance in the most recent quarter, experts continue to have positive opinions about the industry-leading electric vehicle manufacturer. Deutsche Bank anticipates that Tesla will rebound in the latter part of the year. Will the price of Tesla stock increase? Something intriguing that you may not have thought about exists. Watch this space to learn what it is. Before we get started, please click the like button, subscribe, and enable notifications if you enjoy this kind of content so you can stay informed about everything Tesla releases. The Tesla stock has been trending lower over the last few months, starting in April 2022. The top EV manufacturer stock is currently trading below $700 and is declining. If we are to focus, the stock of the company is currently trading at about $35, which is about 50% below its all-time high and down from last year. I have a good feeling that a lot of individuals, particularly Tesla enthusiasts, are frantically attempting to predict what will happen to the company's stock. However, let's first take a quick look at the most recent events on Tesla before we go into our in-depth conversation on this. The corporation saw the largest sequential decline from the previous 2 years immediately following the release of its production statistics for the second quarter of the year. According to the company's investor relations page, during the second quarter of the year, Tesla produced 258,580 vehicles and delivered 254,695 of them. Then there's a stark difference when we compare Tesla's delivery from the first quarter. The most current delivery statistics showed a decrease of 18% from the fourth quarter of the previous year and the first 3 months of this year. This has been impacted by COVID-19 limits, supply chain issues, the shortage of semiconductor chips, and shortages of other parts. When comparing the delivery figures to the same quarter previous year, we can see that sales have increased by about 26.5%. Nevertheless, the latest delivery data fell short of the predictions made by different analysts. Many analysts and Tesla bulls maintained their optimistic view of the company in spite of what transpired. One of the largest in the world, Deutsche Bank, is a financial services and investment bank based in Germany. It claims that Tesla stock was quite appealing and would have had a significant surge in value after the second half of 2022. With this, the company reaffirmed their buying rating for the company's stock and shared its price objective, which is $1,125, or almost 65% above where it closed last Friday. Furthermore, the company announced that Tesla is expected to deliver approximately 1.4 million automobiles this year. 50% of the total units from the previous year is absurd. The company thinks that this will be greatly impacted by the new plants in Berlin and Texas, as well as the manufacture of lockdowns connected to COVID-19 in China. In spite of challenges faced by the EV maker, the company praised Tesla for its second quarter production and delivery. Deutsche Bank also emphasized Tesla's potent pricing strategies. The company claims that Tesla's pricing power can help the business sustain higher margin earnings by doing more than just counteracting inflation. When a business is able to set its own prices, it surpasses stocks with great pricing capacity both during and after periods of high inflation. This is because it demonstrates the effects that a product's price change has on its own demand. Tesla saw a 10% spike in 2021 alone, and then substantial increases in March and June. Prices have increased once more, but both the cost and the wait period for the vehicle are growing longer rather than shorter, which is indicative of Tesla's stronger brand and product positioning. Examination according to Emmanuel Rosner, all in all, our vision is that Tesla remains an EV maker with a higher margin profile through both price capability and operational leverage. According to the report, Garrett Nelson, Vice President of Equities Analysis at CFRA, maintained his bullish attitude on Tesla, in keeping with the Deutsche Bank's assessment of the firm. Garrett stated that the moment is right to buy in Tesla's shares, citing the company's over 30% decline in value in just the last 6 months. He said, "It is a generational investment opportunity." According to the analysis and his firm, 10 to 12 years from now, the largest firms of the world, such Apple and Amazon, will be set up as the main electric vehicle maker. As Tesla continues to gain a significant portion of the market, they are disrupting the industry in this period of their existence. Exactly this is what Amazon and Apple did in their respective eras. Furthermore, Garrett and his company believe that the 30% decline in Tesla's shares is an unfair punishment. By a significant margin, the company continues to be the top-performing automaker that they cover. Additionally, he noted that after beating 10 of the previous 11 quarters, Tesla has been severely impacted in the last few months. For all of their accomplishments, Tesla was not given credit, even though Garrett lowered his 12-month price target for Tesla's shares from $1,200 to $1,100. The research kept Garrett's strong buy recommendation for the stock. In response, Joseph Spack of RBC Capital raised his rating on Tesla's shares, noting that the business is well positioned despite a few challenges during the most recent quarter. Spack said that Tesla's vertical integration strategy gives the business a competitive edge, putting it in a favorable position for both short and long-term markets. Notwithstanding declines in deliveries from the first to the second quarter of this year, Spack claims that Tesla should anticipate an increase in margin for the second half of the year. In line with Deutsche Bank's observations, Spack also noted that, considering the pricing adjustments that Tesla has taken in the past, but hasn't been able to implement because of their backlog, they could see an increase in average selling prices of up to 3%. According to him, Oppenheimer & Co. Incorporated continued to be positive on Tesla in light of the company's earning leverage, leadership position, and most recent decline in share price. The company believes that by Q4, its present issues will be resolved, but they also anticipate some immediate pressure on margin. Additionally, they anticipate Tesla delivering new features because they think the rivalry in autonomous vehicles is intensifying. Oppenheimer evaluation Colin Rush advises investors to purchase Tesla stock, citing his 71% success rate in predicting the company's price moves. However, not every financial business or expert has the same perspective on Tesla shares. The banking firm JP Morgan Chase & Co. reduced its price estimate for Tesla stock to $385 from $395 in a recent report. This indicates a possible drop from current levels of about 41%. The business thinks that given its ongoing issues and the manufacturer's production slowdowns, there's a good chance that Tesla will lose a lot of ground. The JP Morgan call was held following Tesla's announcement of lower than expected car deliveries for the second quarter of the year. The firm cited supply chain disruptions, rising battery metal prices, and increased expenses for other commodities. Price and cost interactions can have a significant negative impact on the company's profitability this year, according to JP Morgan. As per the JP Morgan study, it seems that Tesla has priced an upside associated with its growth into mass market categories at a valuation that surpasses our volume projection for the Model 3 Model Y. This is the main reason for the underweight rating of the company's stock, which implies that investors in Tesla must reduce their holdings in accordance with the weighting given to the manufacturer in a number of indexes. Instead of continuing with the expectations that analysts and corporations have for Tesla stock, why don't we focus on what the company has planned for its stock? Tesla had declared in March 2022 that it planned to split its stock again, but it withheld specifics. They said last month that a vote by shareholders about the 3-for-1 stock split will take place at the next annual meeting. This basically indicates that you will receive 2 additional Tesla shares if you now own one. Splitting a stock does not directly affect the performance of the company, but it does lower the price per share and increase accessibility. Will Tesla